Good morning, everybody. Welcome back to another episode of the Market Open. We are here today live Thursday, March 13th. We are a little bit early today by about 3 minutes. And the reason we're early is we got PPI data. Did I remember we had PPI data today? I absolutely did not. PPI is like the ugly stepchild when it comes to inflation data. CPI is the only thing people care about, to be honest. And PPI matters. It's not like it doesn't matter. It's just no one remembered that we had PPI data, but we do have PPI data. Here is what we've got. Producer price index. It's a beat. 3.2 headline year over year versus 3.3 expected. 3.4% core year over year versus 3.5 expected. This is good. We really needed a string of consecutive good data. And that's particularly because the past couple of weeks have been pretty tough with tariffs. We do have some new tariff updates that we're going to talk about in just a couple minutes. But because Trump couldn't waste any time this morning to begin more tariff volatility. But PPI came in better than expected, and it's not doing too bad. Now, in terms of the granularity of the data, we also had initial jobless claims. So initial jobless claims came in at 220,000 versus 225,000 expected. So about 5,000 less people than were expected applied for unemployment, which is good. Again, PPI came in on the top line and core better than expected. Now, those were the year-over-year numbers. Take a look at the month-over-month numbers. On the month-over-month for core, the market was expecting 0.3%. We came in at negative 0.1%. Which is like really good. Like that's incredible, dude. That's like not growing month over month when it comes to inflation. That's like basically disinflation. And then PPI headline over the month, the market expected 0.3%. We came in at 0%, flat, no increase month over month. So year over year, we came in with a nice decline against what the headlines were expecting, 3.3 versus 3.2, 3.4 versus 3.5. And then on the month over month, we come in at 0 versus 0.3, and then negative 0.1 versus 0.2. I mean, it was good data. It was really good data. I mean, what can you say? It was data that we needed. It was data that we had to get right. If we got bad CPI data and then really bad PPI data, yeah, given the volatility that we're already experiencing in the market, and given the bounce we had yesterday, and we'll talk about what happens to that bounce today if that can continue to sustain itself, because it was a good bounce yesterday. It was a decent bounce. Now it's just a question of if this data is good enough to keep it up. And I think the data, at least for now, if there's no crazy tariff volatility, if you go negative on the core, which is what the Fed really cares about month over month, and then no increase 0% on the month over month on headline, that's not bad. That is not bad at all. And that is what we got. So yeah, let's take a look at equities right here, and then we'll see kind of what's happening across the entire market. Everything is not necessarily green. It's not as red as it was when I woke up. So when I woke up, things were a little bit worse. NVIDIA just turned green. It was a lot better yesterday in overnight markets until like 1 a.m. By the time I got to 1 a.m., everything kind of tanked. I don't really even think there were some headlines. I think just more volume came in. People kind of sold into the strength. Maybe they knew Trump was going to announce some tariffs, which he just announced a couple of minutes ago. We'll talk about that. But Robinhood, Google, MicroStrategy, all these guys are down in the pre-markets. Again, they were down a lot more. So we do have some green candles, but we also do have a ton of red candles across the board on a lot of these names. The S&P 500 down just about 0.25% on this current PPI data here right now. Cool. So that's what we got, PPI data. We also have Palantir's Aipcon. If it wasn't obvious enough, yes, I am here at Palantir's Aipcon. I will be here today. For those that are new to the channel, you might not remember the fourth Aipcon that I made an appearance at. That was kind of like a surprise. They had me come and host the halftime show. That was the first ever halftime show that they did. Then I was back at the fifth one to do the halftime show again. And now I am back at the sixth one to do a halftime show. So it's going to be fun. It's going to be super, super exciting. I can't wait for you guys to see everything. I was there yesterday rehearsing and practicing for the, it's called the Backstage Pass, kind of our halftime show. And dude, this set is going to be crazy. Like people, this is just a sneak preview. This is not even, I mean, this is just like one of their TV screens with Aipcon, but the actual set today that you guys are going to see on the live stream, insane. Like they went above and beyond. I know last time people were confused. They had like Nikes in the background and people didn't really get the theme and the shoes and stuff. This time it's different, bro. It's different. So it's going to be super fun. And yeah, for those that have never seen an Aipcon before, Sasha, who's the organizer of the Aipcon, she decided a couple AIPcons go. This is the 6th one, which is crazy. They've already done 6 of these. But on the 4th one, she decided to do a halftime show. And that's after the first group of speakers. There's a 20-minute intermission. Historically, for the first 3, people would just like get coffee and online would be bored. And so on the 4th one, she decided, what if we spice things up? And we're doing that again for the 6th one. So that'll be starting, I believe, at 10 a.m. Eastern, if I'm not wrong. Yeah, 10 a.m. Eastern. The halftime show will be basically like 11:30 to 12, around about that time. Or maybe it's 12 to 12:30. It'll be basically in the middle of that show. And it'll be super, super exciting. So fun stuff. Fun stuff. Palantir also announced a bunch of partnerships. Dude, I'm going to make a post on X in an hour with all the partnerships they announced. It makes sense why they've announced back-to-back partnerships, but I think it's like almost 10 partnerships within the past 7 days. Here's another one with Archer. So Archer, as a stock, I know a lot of you guys like. It's also a company that a lot of you are interested in. I don't have any investment in them. They will be at AIPCon. I will be interviewing, I think, the COO of Archer, and I'm going to have a bunch of exclusive interviews that I'll be posting on the channel in the next couple of days that I'll be interviewing for customers of Palantir. So that'll be super fun. Palantir partners with Archer to build the next AI foundation for the future of next-gen aviation technologies. Archer's stock on that news, I believe, is up. They are up 1.8%. 1.8% on this partnership. Palantir also partnered with a company called Saladrone, which is another defense name, this morning. So I'm going to recap all the different partnerships soon, but there's a lot of partnerships literally in the past week. I mean, we got 0 press releases from January to February. And now I think we got 10 of them in basically 7 days. So super, super, super cool stuff. Matthew says, how is it you can be on time when you're traveling, but not when you're in the comfort of your own home? That is a good question. I think it's because I'm scared when I'm traveling. Everything needs to be like perfect. Everything needs to be set up. So you have more pressure to make sure that you're that you're here. Ryan says, can you take another sick day so it's a green day? Well, hopefully we had a green day yesterday, right? We still ended, even I got off the market open and it was like not tanking, but we were definitely like getting ready to go red. And then we did go red. And then by the end of the day yesterday, I mean, we were green. Tesla ended at 248. I know right now it's down 1%, but still yesterday was a great day, up 8% on Tesla. Netflix was up 3%. Robinhood was up 7%. Palantir, Robinhood 7.04%. Palantir yesterday was up 7.1%. Palantir is right now down 1.28%, even before AIPCon. Seems like the entire macro is getting hit. Path had a crappy earnings. We'll talk about that in a second. They got demolished, down 20%. Robotic processing automation probably just not in the right stage, given all the benefits of AI that we're seeing right now. Also, Adobe, I think they were down 5%. Yeah, they're down 7% of the pre-markets. Their earnings were good, not great. And in this environment, you kind of need really good earnings. And, I guess they had really good earnings, but they just didn't have great earnings. And that's what you need right now. So we'll talk more about those 2 companies, but they are down more than 5% right now in the pre-markets as well. Intel's up 11%. Yes. So after hours yesterday, Intel announced a new CEO. I don't know anything about the CEO. They've done some cool stuff at other companies like Cadence before. They're not a bad operator or person who can execute. It's just a question of, can they turn Intel around? Intel's up 12.3%. They were up 5% yesterday after hours off that news. Look, I think it's bullish. I guess we're gonna have to give the new CEO at least 6 months to begin executing and see what they can do. But at least Intel has a little bit more direction now, and it's not like led by 2 co-CEOs where the market is confused if they're doing anything. Now we actually have a real CEO. So we'll talk more about that Intel CEO, but that one's up 12.9% based on that news currently right now. Okay, so tariff volatility. Let's talk about that as well and get into what we've got going on there. So I woke up and this is the first thing I saw, because why not? But Trump is mad about a 50% tariff that the EU has on our whiskey. And he says, if this tariff is not removed immediately, the US will shortly place a 200% tariff on all wines, champagnes, and alcoholic products coming out of France and other EU represented countries. This will be great for the wine and champagne business in the United States. I mean, it's every day at this point. So it's, the 50% tariff that the EU has on our whiskey, Trump is not going to tolerate that anymore. He is going to retaliate. I think this is a string of other retaliations that is going to happen very soon. And we're going to likely see more and more of this Twitter trade war being fought. 200% tariffs. I don't even know. I don't even think he's serious about 200%. I think he just picked a number that's much higher than 50%, in this case, 4x higher, and wanted to create some arguments about why the EU needs to be more fair. So we'll see what the EU's response is. Maybe they get rid of the 50% tariff and maybe that's like super good, or maybe they say, screw you, we're not doing that. And Trump puts a 200% tariff and then we have a trade war in regards to alcohol. We're going to see how this ends up playing out. The 10-year is spiking on maybe the tariff news, but also the PPI news. PPI came in way better than expected. The 10-year is not going down. This is not good. We need to see this 10-year go down after a good CPI or PPI, but it seems like people may be selling off bonds in order to buy stocks. And although that's good for the market, not really good for those 10-year yields to start coming down. Let's get some coverage on PPI, and then we will keep going from there.
All right. Excellent job, as always, Rick. Thank you. Let's get over to Steve Leisman. He joins us right now with more on this as well. Steve, you've been digging through the numbers a little bit. What else jumps out at you?
Yeah, just a little bit. Look, here's the deal. We have this tension that's going to happen, but isn't happening now. I think the first thing you want to say to yourself is you're going into a period of time when there could be some price increases relative to tariffs. It's always better and much better to be coming into a situation here where inflation is lower. These are good numbers, basically driven in one part by trade services. It's not necessarily a good thing for investors to hear because margins, it's a measure in the wholesale numbers of people who are selling things, the middle folks out there, the middlemen, we're down by 1%. That's one aspect. Final demand for goods, though, was up 0.3%. That was perhaps driven by chickens and eggs and those sorts of wonderful things. But overall, it's a good report. It shows that inflation coming into this uncertain period is under control. I'm not seeing a big pop in jobless claims of federal workers. I just had that number. It was up just a bit. It's not a big deal right now, and I didn't see a big pop in D.C., Virginia, and Maryland when I scanned it very quickly. It has been creeping up in that area. Those layoffs may be yet to come because when you get the severance, you don't necessarily have the ability to file for jobless claims right away. That's something that can come down the road. Interesting this morning, we don't often talk about Bank of Canada. They cut their interest rates by a quarter point, but a couple warnings out there. They talked about how are they going to deal with this idea? Tariffs could drive up prices, but also drive down growth. Let me see if I have that quote here from.
So the Bank of Canada, we talked about yesterday, they lowered their interest rates. They were going to do it anyway, but I think it was primarily based on this idea that tariffs are going to create higher prices. So they need to stimulate the economy by lowering rates in anticipation of those tariffs getting more aggressive. So that's what we got. I mean, this is the nature of the market that we're in. Maybe the market would actually be like doing a lot better right now based on this PPI data if we didn't have some of the tariff volatility that we're seeing right now. But this is, again, the nature of the market that we're in, and this tariff volatility is not going away anywhere. China's commerce minister said this morning, we are urging the United States to drop tariffs on steel and aluminum that went into effect yesterday, officially, though there's no extension of those. Those are in effect, in order to avoid a resurgence in global inflation. So you got China saying, hey, can you like stop doing this? You got the EU saying, hey, we don't want to engage in this anymore. Canada and Mexico obviously are trying to delay it. At the end of the day, this is Trump's game and he's playing it right now. And we're going to have to see if he can win this game, but it's a volatile freaking game. And for all of us playing in the game of the stock market, we are experiencing that volatility as well as the tariff wars continue to get aggressive. But the one thing we, can look at more objectively, CPI and PPI data, it's good. It's really good. I mean, I did not expect to go negative on core month over month. Core is what the Fed really cares about. And that came in negative. Are you kidding me? Like that I did not expect. I thought that was going to take a lot more time to be able to get there. It shows the argument that we've been talking about for a while, which is that inflation is coming down. Like we all know inflation is coming down. We all know a lot of it is represented by lagging indicators that the Fed uses like shelter. Trueflation's got it at 1.37% right now. The Fed has that at 2.9. If we get anywhere near 2.3, 2.4, I think we're cutting rates pretty quickly. But, we're just not there yet on those headline metrics. On the probabilities for a rate cut in March, that meeting on the FOMC is in 6 days, March 19th, we were at 1%. It is pretty much guaranteed we are not going to get a rate cut in 6 days. On May, it's at 27%. This number actually came down from 40% yesterday, which was surprising because it was good CPI data, aka inflation coming down. I guess not enough to dramatically create any unique drop in the 10-year or an increase in the probabilities of getting a rate cut. Looks like June is going to be when we first get that cut. But if President Trump wanted to cut, in the next 2 to 3 months, he's not getting it unless we get really bad labor market data. I mean, we're just not seeing enough weakness in the economy, especially with non-farm payrolls, initial jobs claims, et cetera, to be able to meaningfully get a rate cut anytime soon. So that's what we got going on when it comes to rate cuts and broader interest rates. Yes, the 10-year is up again. Very annoying. Yeah. We need that damn 10-year to come down, and it's not coming down currently right now. I do agree, though, with Mr. Bunga Bunga in the chat. I love that username. Tariffs will disappear in 3 months. I kind of agree with you. I think the volatility from tariffs is not going to last for the next 4 years. I think this will be resolved, hopefully, in the next 3 months, but I can't guarantee that. I don't think Trump can guarantee that. And if we don't make any meaningful progress, aka negotiations on tariffs with, at this point, not just China, not just Canada, not just Mexico, but now the EU, potentially India. Trump was hinting that he wants to start retaliating against them because they have tariffs on our alcohol, ironically, as well, that he talked about with the EU. There might just be more players in the mix that we have to deal with. S&P 500 right here down about 0.12%. Or 0.16% in the pre-markets. Apple's down 0.3, and then Nvidia's up 0.38 as well. And so we're going to have to see. I think this tariff volatility is not going away anytime soon. Palantir and Archer deal, any insight? I will have more insight for you today because I will be at Aipcon and I will be speaking to the Archer chief commercial officer, I believe is the person I'm speaking to. But yeah, I have not read through the press release yet. I'm going to be reading through it a little bit more. I think what it is Archer's just using Foundry and AIP, right? Nothing too crazy. It is nice to see them though, because Archer just Palantired with Anduril. They are now Palantiring with Palantir, so they're obviously Palantiring with a lot of these defense companies to build modern day technology and infrastructure for aviation technologies. And I think a lot of, Archer's not really generating a ton of revenue or earnings yet. I think a lot of people think they have potential to really become a serious company in the future. So the fact that they're building on top of Palantir, partnering with Anduril, it just adds more legitimacy to the nature of the company, even if they don't have actual earnings growth here right now. But it's nice to see. And I'll talk more to them at Aipcon today. Market close will not be today because I will be at Aipcon. So very excited to bring you guys a ton of coverage from Aipcon live. If you follow on Twitter, I'll be posting a ton of pictures and selfies and all that stuff. So Twitter's in the description. You can follow me there. And you guys will get a lot of backstage, behind the scenes content when it comes to Aipcon. Sky says, thanks for putting a hat on. You're welcome, Sky. Dude, I got destroyed yesterday, not just in the chat, but on Twitter. I don't know if you guys saw, I posted a video about CPI. I don't really post videos on Twitter. So I was like, oh, let me just post a video going live. And the video got 508 likes. Okay. The first comment underneath it. Where's the comment? WTF is that hair, bro? Gets 1,000 likes. So this is called a ratio on Twitter. When someone responds to your tweet and they get more likes than you get on the original tweet, it's very obviously showing the audience agrees with the response more than the creator's post. And yeah, that was it was so bad. This guy apologized for it, bro. I forgot where he apologized, but he was like, dude, I'm sorry for the ratio. I was like, it's okay. You deserve it. Like, if you beat me by 50%, you deserve it, bro. You absolutely deserve it. So yeah, that's what we had yesterday. So today's gonna be fun at Aipcon. I'll give you guys a lot more coverage from that, and it'll be exciting to get all the backstage passes from what we've got going on. And I think it's gonna be fun, dude. I looked at the set yesterday. It was really, really exciting, and I thought it was one of those sets that people are gonna look at and people are just gonna freak out. Like I walked in to the set yesterday and I was like, this is crazy. Like they went above and beyond, absolutely above and beyond. And I think people will be very impressed. Daniel says, hey, Mitt, I hope you feel better today. Warm regards from Spain. I do feel better. I slept pretty much all day yesterday after we went through rehearsals. And so I think I'm good. I think I'm pretty good. Took a couple of days, but should be back to normal. And yeah, excited for today. NVIDIA is up 0.79%. I was happily surprised by the 7% day we got yesterday on NVIDIA. It really felt like maybe we did put in a bottom and we're starting to get a little bit of momentum to the upside. I still don't believe it yet, unfortunately. I think we have a little bit more pain to get given the tariff volatility. Now, the CPI and PPI data, it was incredible. And the fact that Apple went down yesterday and NVIDIA went up finally seemed like some normalcy was returning to the market. Like Apple should be trading at a fundamentally lower multiple than NVIDIA. Right now, Apple's trading at 35 times. NVIDIA's trading at 27 times still. So I think there's more of that rotation to happen. But like that started making sense to me. I was like, okay, the market's like, getting its common sense again, where it's like they're not going to buy something that's egregiously overvalued compared to something like Nvidia. But then again, you just can't trust it. The CPI and PPI data makes me excited to feel like, all right, maybe it's time to start buying again. But then you get Trump talking about 200% tariffs this morning. And I think the market's getting a little bit not only annoyed, but desensitized to his tariff volatility and his tweets about tariffs. So maybe that's like one thing we have going for us, where eventually it'll like the market will just stop caring. But as of now, the market still cares. And until the market stops caring, we're going to have to deal with those headlines every single day. Trump was with the Ireland PM yesterday talking about a bunch of different things. And he also was talking about why the stock market will go up.
Financially will be stronger than ever before. I think the markets are going to soar when they see what's happening. I'll tell you what, I'm called every day by numerous big companies. I spoke at the Business Roundtable yesterday. They had the largest attendance they've ever had. And these are only the CEOs and chairmen, but mostly the people that run the boss, the people that run the top 150 companies. 150 people showed up. Every single company showed up. First time it ever happened. It's been around a long time. The biggest business leaders. We had a great discussion. Went really well. And I want to tell you, there's tremendous optimism out there about our country in terms of regulations being cut, in terms of taxes being cut. And it would be great if the Democrats would do what's right. It would be great if the Democrats would do what's right for our country for a change, because they really are. They've lost their way. They've lost their way.
Now, by tomorrow, if we do not get a agreement on the budget deal, we're going to get a government shutdown, or I think it's in the next couple of days. So we really need to get the Senate to pass. The House has already passed the deal. If not, then I don't know what's going to happen. I don't know how the stock market's going to react if we have a government shutdown, but that's another layer of volatility, which is why I don't really trust the bounce yet. I'm like, we got to kind of get that resolved, because if we shut down the government, that's just not going to be good for anybody. We got a new tweet from Trump just now, literally 2 minutes ago. The globalist Wall Street Journal has no idea what they are doing or saying. They are owned by the polluted thinking of the European Union, which was formed for their primary purpose of skewing the United States of America. Their thinking is antiquated and weak and very bad for the USA, but have no fear, we will win on everything. Egg prices are down, oil is down, interest rates are down, and tariff-related money is pouring into the United States. The only thing you have to fear is fear itself. You know, it's ironic that he calls the Wall Street Journal globalist, because the Wall Street Journal is the one mainstream media source that's usually on the side of Republicans, because it tends to be more finance oriented. And I think a couple of weeks ago, there were some op-ed writers at the Wall Street Journal that like really shitted on Trump, like on his tariff policies. And I think that's when Trump got mad at the Wall Street Journal. But the Wall Street Journal tends to defend the Republican Party more so than any other mainstream media outlet, because it's like finance and lower taxes and yada, yada, yada. But even they were just like, this is like stupid. And I think that's when Trump got mad at them. So yeah, another tweet by Trump this morning. We got another partnership by Palantir, dude. We are getting, I think we got 3 of them this morning. Palantir and Databricks announced strategic product partnership to deliver secure and efficient AI to customers. This broke just now. The partnership will provide an open and scalable data architecture that combines Palantir's powerful ontology system with Databricks' processing scale and industry-leading data and AI platform. With battle-tested improvements for joint customers in the field, Palantir and Databricks are delivering real-time AI-powered autonomous workflows to continuously allow integration between customers of the Databricks data intelligence platform and Palantir's AIP. Okay, so we had Palantir and AIP with Databricks. Then we had Palantir and Anduril this morning. And then on top of that, we had another Palantir partnership, which was this one that we didn't talk about, Saronic. We are excited to announce that Saronic and Palantir are joining forces to accelerate the development and delivery of autonomous naval capabilities for the U.S. and its allies. And then we had another one 4 hours ago that was announced, Palantir and Saladrone. Saladrone and Palantir announced strategic partnership to advance AI-powered maritime intelligence. So that's 4 partnerships in one day. Yeah, I mean, look, Q1 earnings is going to be nice. I think Q1 earnings is not going to grow at 30%. I think we're growing closer to 35%. Do we get exactly 35? We'll find out. But I mean, this is like almost, I'll do a recap post on X later today, but I think it's at least 10 partnerships in the past week and a half, which is not bad. Speaking of Palantir as well, we did get a update from one of the sell side firms that just started covering Palantir. They did lower their price target, but they did not lower their rating. on Palantir. So they lowered it from 141 to 125, probably just because of macro uncertainty. But here's what they said. We recently met privately with Palantir CFO David Glazer and members of his finance team, where we had an opportunity to view an AIP product demonstration and discuss current AI industry trends, the competitive environment, the direction of spend, and the firm's unique bootcamp go-to-market model. While the purpose of our meeting was introductory and aimed at gaining a better understanding of the firm's business model, product direction, and our go-to-market approach, we came away with increasing conviction and our buy rating and core investment thesis that Palantir is an early software leader in enterprise AI. We believe the industry is at a tipping point as its small-scale pilot programs move into production and AI use cases grow exponentially across all industries. Again, lowering the price target makes sense. I mean, 141 in this macro is probably a little bit tough. Going to 125, I think that's kind of reasonable, lowering the price target. But they're not lowering their stance on how bullish they are on Palantir. And that's pretty exciting because given all the deals we're getting and given how some of the sell-side firms are thinking of Palantir, I think Q1's going to be good, bro. Like, again, I don't know how the market's going to react to it. I don't know if Trump's going to tweet something volatile about tariffs the day of Palantir earnings, but their job is to grow. And as long as they can continue to grow, regardless of what the stock does, that's all that matters. The stock will eventually reflect the growth. And obviously the stock already has reflected a decent chunk of growth. So, yeah, Palantir's firing on all cylinders here currently right now. Yeah, they also partnered with Voyager. Yeah, that was 2 days ago. I mean, I will write up that post because there's a lot of different partnerships going on right now with Palantir, and it's all basically happened in the past week. We talked about Intel. Yes, Intel has a new CEO. I don't know enough about that CEO, but Intel is moving up on that CEO news. If you own Intel, let me know in the chat, up 13%. And if you're selling into this news, let me know. I think there are some people that are going to take advantage of this news to sell because they just don't want to stick around to see what the CEO does. But if you think the CEO can really create a turnaround, then maybe that happens. By the way, guys, the market's losing all of its red and it's ready to go green. Tesla is $1 away from going green. S&P 500 a couple cents away from going green. Robinhood already turned green. Palantir still down 1%. I think that's going to reverse soon. Got a lot of these names that are red, but they're not that red. SoFi as well is up 2% right now in the pre-markets, which is nice to see. And it looks like we're setting up for a green open. It really does. Yeah, I don't know what the SoFi news is for why it's up 2%. Usually SoFi doesn't move opposite of the market, so it feels like there's some news that's there. Kathy Wood did sell out of her entire SoFi position, so she's gone. She's out of it. But SoFi is gaining some momentum here right now. French minister responding to Trump's 200% tariffs on alcohol says, we will not yield to threats and we will protect our industries. Cool. So the French are not going to change their stance. The Europeans are probably not going to change their stance. And Trump's going to have to go ahead with these 200% tariffs. So, I mean, look, I think there'll be some negotiation that gets there. Obviously, everyone wants to talk their book and they don't want to sound weak immediately. But are we really going to tariff alcohol by 200%? Like, just like, I don't know, dude. And if we do, I don't know if the alcohol companies are going to like that. So we're going to have to figure it out over the coming weeks. But yeah, if you're just joining, Trump did say he wants to tariff EU alcohol by 200% this morning. And the EU doesn't look like they are. The EU doesn't look like they are easily going to let him get away with that. SoFi expands loan platform agreement for $5 billion with Blue Owl Capital. Okay, so that's the news that SoFi is moving on. Interesting. $5 billion loan platform agreement. That doesn't mean that's $5 billion in revenue or anything like that. That just means that's the volume of loans they seem to be transacting with Blue Owl Capital. That was one of the firms they partnered with. I think that was one of the main firms they talked about in their earnings for Q4. So that's good. Not bad news. Makes sense that SoFi is moving a little bit off that $12.02 right now. I think SoFi is going to take some more macro to get SoFi in a better position. LendingTree had great earnings, so I thought that SoFi would kind of follow that, but they haven't really followed. But overall, that's not a bad thing for us to see. Earnings from yesterday. So UiPath and Adobe were the most important ones. Also Centennial, Centennial One. They are down 11%. Cybersecurity name. They got hit pretty badly. Path right here down 19%, and then Adobe down 7%. The problem with Path, I think, down 19%. Let me know if anyone owns this one, but this one got hit. I think the problem with Path is that from my understanding, I don't know the company as well, but from my understanding, the robotic processing automation, which is basically a company can use RPA to manually automate tasks or to autonomously automate tasks inside of the organization, which theoretically takes away the need to have an employee do certain things, which should increase productivity, margins, etc. That is also the promise of AI. And I think the street is not looking at Path as a growth stock in the context of AI hypercharging the excitement from RPA. And maybe the street's getting it wrong, but at least on the earnings that we saw yesterday, I think they're expecting about 50 cents of earnings for fiscal year 2026, growing at about 12 to 15%, which is just not enough for the multiple trading at a 6 times price of sales that the street was looking for. So this one's down 19% right here. Again, that one kind of surprised me because Path, you guys got to remember, Kathy sold this thing like heavily a year ago. Maybe not a year ago, about 7 months ago, but she still has a pretty decent position. So I didn't expect it to get hit as badly. And it already fell 50% after she sold. And before she sold. So she sold a ton of it, but she still had so much of it. But still, they just weren't able to put up the numbers that got the street excited. They missed right here on revenue. This was their actual earnings. And then they beat on EPS. So 26 cents versus 19 cents expected. That was a nice beat. And then 423 versus 425 million. That was a miss on revenue. I believe the fiscal year 2026 guidance was really got the street to get more upset about what was happening. So that's what happened with Path. And then Adobe right here. Adobe beat on both of their metrics, but I've been bearish Adobe for a while. I don't like their moat when it comes to AI and like them as a SaaS. I think there's so many better SaaS businesses when it comes to AI. They're just not putting up the growth to get the street excited. They got 10% top line revenue growth. In a world where Palantir is growing almost 40%, like the street needs to see a lot more from an incumbent like Adobe. And so that's why I think Adobe right here is down 7%. Did Trump tweet again? Did he tweet again, dude? At this point, I just need to have alerts on Truth Social every time he says something. He just said okay, so he did tweet again 4 minutes ago. The US doesn't have free trade. We have quote unquote stupid trade. The entire world is ripping us off. Okay, that was the Trump tweet at 6:09 a.m. So there you go. That's what we got from Trump. It is more and more and more of the same when it comes to volatility. Did you see that the Trump family wants to buy a stake in Binance? Okay, so I saw that headline. Let me look that up real quick in the morning. This is kind of weird. This is really weird. Yeah, this came out from the Wall Street Journal 10 minutes ago. So let's talk about this for a second. The Trump family has been in talks for a stake in crypto exchange Binance, per the Wall Street Journal. At the same time, Binance co-founder or founder CZ has been reportedly pushing Trump for a pardon. He spent a couple years in jail, if I'm not wrong, for fraud-related crimes 2 years ago. Representatives of President Trump's family have held talks to take a financial stake in the U.S. arm of crypto exchange Binance, according to people familiar with the matter, a move that would put Trump in business with a firm that pleaded guilty in 2023 to violating anti-money laundering requirements. At the same time, Binance's billionaire founder, CZ, who served 4 months in prison, so not 2 years, 4 months, after pleading guilty to a related charge, has been pushing for the Trump administration to grant him a pardon. People familiar with the matter said. CZ, widely known, remains Binance's largest shareholder. Yeah, I mean, this is obviously a grift. Like, there's no way to sugarcoat it, bro. Like, you cannot take a stake in a private company when you're the most powerful man in the world, even if Trump is not literally doing it. The Trump family, which is associated with Trump doing it, is, I mean, like, do we really have to get into the definition of a conflict of interest? Like, it's pretty obvious here. But am I surprised? No. Like, the dude launched a meme coin. He launched his own freaking meme coin. Like, at this point, nothing surprises me. And I didn't condone the meme coin. I obviously would not condone this. This is pretty ridiculous, especially if he pardoned CZ, because CZ was found guilty for anti-money laundering, AML, right? Like, so we can't act like the pardon is because CZ was prosecuted for, I don't know, propaganda related to crypto crimes, right? Like, no, this was like a legit exchange. Binance is, I think, one of the top 3 exchanges in the world, up there with Coinbase. I think they're bigger than Coinbase, if I'm not wrong, because they're used more globally, even if their market share in the United States is a little bit lower than Coinbase. But yeah, taking a stake in that from a financial perspective, that is obviously a conflict of interest, and it's ridiculous. So I hope that doesn't happen, but it does seem like, well, yeah, I just got the notification from the Wall Street Journal. If this is serious, that is not what crypto needs. Not at this time. Absolutely not at this time. So that's what we got. If we really get a pardon, bro, if CZ gets a pardon, that would also be kind of wild to see. Let's get some more PPI and inflation updates right here. PPI did come in way better than expected. And then we'll keep going from there. We got the market open in about 13 minutes.
Great. Inflation doesn't look like it's building in the producer prices. That's fantastic news for the battle we've been trying to wage. That's inflation. But the markets didn't really respond all that well to it. You're still looking at futures down across the board for the equities markets. We watched yields pick up. Is that because we look at this and we think, just as you're describing the overall economy right now, we'll wait and see? We think we'll wait and see if this really lasts based on all the other things that are happening right now?
No, absolutely. I do think that the PPI data tells us that maybe there is a risk that there could be a bit of a harder slowdown going on. At the same time, jobless claims, of course, being still good, is telling you that the hard data, at least on the labor market, is still reasonably strong. And it fits with the overall picture, as Steve also just discussed, that the soft data has been coming in relatively weak, with consumer confidence going down, people being more worried about their jobs, people being more worried about higher inflation, people not planning to go on vacation. And at the same time, on the corporate side, confidence has also been declining. CapEx plans by companies have been going down, both in the regional Fed district surveys and NFIB survey. All those things suggest that the soft data rolling over is making people worried that maybe there is a risk that this, of course, also could mean that the hard data will begin to roll over.
What Steve pointed out for the Bank of Canada, very interesting commentary too, because I was thinking about that as you watch Treasury yields tick up a little bit. Maybe the concern is the economy may be slowing down, but the Fed is going to be reluctant to cut rates too quickly before they see what happens with the tariffs and if that causes more inflation.
This is really, really important because the Fed has a dual mandate, namely full employment and inflation at 2%. Now, if inflation is more sticky and it's not going to come down so quickly, well, and
these numbers suggest the opposite.
Well, if you have tariffs coming on top of that and inflation potentially moving higher, that would argue for the Fed beginning to raise rates. Whereas if growth eventually begins to slow down, including from the headlines we got from the airlines earlier this week, that would argue for the Fed beginning to cut. So should the Fed put more weight on the inflation numbers still being somewhat more sticky, or should the Fed be putting more weight on the growth picture potentially deteriorating?
So you think tariff inflation is not different than organic inflation caused by, printing too much money? Because we've had people come in and say, look, it's totally different. It's not ingrained into the system. It goes on, it goes off, and it shouldn't be viewed as the non-transitory inflation that the Fed argued was transitory. Now we know it wasn't.
So let's agree that there are several factors driving inflation. In other words, there are several things that move inflation up and down. And one very immediate impact is that if my avocado becomes more expensive, then the CPI by definition will be going up. But you're right, there's a lot of other things.
It may not be long term,
Right.
but
that's why the longer term
guacamole. I hear you.
And 100% other things that potentially also could be impacted is, of course, that over time, if growth slows down, that effect might be relatively small, and that could be dragging inflation down. And as you're highlighting, other ideas would also say that if you have the money printing or M2 growing, that could potentially also have impacts, both to the upside and to the downside. At the moment, probably more to the downside.
The Fed,
Well, look, PPI and CPI, the numbers we got, again, for those that are just joining, incredible numbers. I mean, I did not think we would get these types of numbers, especially on the month over month versus year over year, but it was good. Is it sustainable? We'll find out next month and the month after that. We kind of need a good string of 3 months of data to show us that we are seeing a meaningful decline. And maybe then by June, Jay Powell will have more than enough reason to give us a cut outside of a quote unquote weakening economy, which is what Trump has been pointing to. But we should get inflation coming down. Eggs have dropped from their all-time high price of $8.25. They are still up 58% year over year. But in the past 2 weeks, we have seen a drop off from $8.25 to about $5.80 on eggs. So still pretty expensive for a dozen eggs, but it is coming down, which is nice to see. Airline fares are down. We talked about that yesterday on the CPI news. And then oil prices have gone down the most they've been in 2 years. Oil down again right here at $67. And oil as an input cost for every business directly or indirectly should help their costs, which means maybe we get better margins going into Q1 earnings, given oil prices are down substantially. So we've got a lot of good positive data for why inflation should be coming down. It's just going to be a question of this administration's monetary policy for how they manage the growth side of inflation as well. Speaking of monetary policy, we've got Howard Lutnick, who had a very interesting plan yesterday around taxes that he talked about, particularly about people who make less than $150,000 paying zero taxes.
Who cares? I tell you what, who cares? Donald Trump cares. And when we balance the budget, you know what that means? That means our deficits stop. Interest rates come smashing down. His goal is to have external revenue. You know, the way I think about it, we all are so used to paying taxes. We're so used to it. We have like Stockholm syndrome. You know, don't stop the Internal Revenue Service, God forbid. How about this? The rest of the world leans on our economy, breathes off our economy. Not only is our economy $29 trillion GDP, but we consume $20 trillion a year. We are the buyer of everybody's stuff. We buy everybody's stuff. So who's more important? The people who sell stuff or the people who buy stuff? So we are the buyer of everybody's commodities, products, goods and services. Everything comes from us, right? Let them pay a membership fee. We all understand that model. Let them pay. How about we, you and I, and every single person we know pay less? How about no tax on tips? How about no tax on overtime? How about no Social Security? How about all those things? These are the kind of thoughts that will change America. I know what his goal is. No tax for anybody who makes less than $150,000 a year. That's his goal.
So this clip went so viral yesterday that I got a call from Steve. And Steve said, "Did you see the clip?" And I was like, "What are you talking about? What clip?" And he was like, "The clip." I was like, "What clip are you?" And then he sent me the clip. And I watched the same clip you guys just watched right now yesterday, I think at like, I don't know, 9 p.m. And I was like, "You can't think he's serious, right?" He's like, "No, he wants to get no taxes for people who make less than $150,000. I'm like, "Steve, there's no way in hell people who are making less than $150,000 are not going to, like, maybe I'm a little naively skeptical here, but I think some of my skepticism is warranted. I don't think we're ever going to get people in the United States of America that make $149,000 not paying a decent chunk of taxes, because the external revenue sources we have on taxes, aka tariffs, are going to be able to fund that deficit. The highest amount of percentage of the overall tax revenue we collect in the United States of America, it's not corporate income tax, it's not capital gains tax, it's income tax. This is why owning a business is so important. When you have an LLC or a C Corp or an S Corp, you can write deductions against your business. So all this traveling that I'm doing this week, that will be deducted against any income that my LLC brings in next year. And I can show that, hey, I spent $500 on this flight. I need to, that flight was important for my business, yada, yada. I can deduct $500 from whatever income I make. If you're working a regular job, you can't take that deduction. Like, that's not possible, right? So like from that perspective, owning a business is very influential in the United States. The laws are built to help people that own a business in regards to taxes, deductions, et cetera. But if you have a regular job, the laws are pretty much against you, and the laws are set up for you to pay as much taxes as possible. So the idea that there is somehow, and so people who make, $130,000, $120,000, they pay a lot in taxes, sometimes even a lot more than corporations, because corporations can show so many losses and loopholes against their gains and their profits to reduce their taxes. That is the majority of income tax in America. And as a result, to somehow be able to replace that with tariffs, I don't see it. I don't see that happening. It's just not realistic. So when Steve called me literally just about this clip, I thought he wanted to talk about something else. He was like, "Yo, did you see that?" I'm like, "Steve, like, there's no way you can believe this, bro. There's no way this is happening." But then Steve wanted to talk to me about Grok 3 and how it's becoming like his financial advisor, and he's like asking it about all these questions. Steve's in love with Grok. Steve loves Grok. It's really winning him over. But still, I don't think there's going to be a chance that people making less than $150,000 are going to avoid taxes. I think it's a ideal that Trump wants to live up to, and maybe he reduces taxes to an extent. But the idea that if you make $135,000, you pay zero in taxes because you don't make 150 or you don't make 170, I just find it a little unbelievable currently right now. S&P 500, a couple charts before we get into the market open in 4 minutes, hit its most oversold level yesterday since September 2022. This feels relatively bullish. We looked at a lot of bottoming indicators. This is maybe one of them. So hopefully we continue to get a bounce. We'll see in the next 4 minutes if we can continue the bounce that we got yesterday, which it was a real bounce yesterday. I mean, there were some pockets of the market that were down, but for the far majority, Mag 7, Tech, Palantir, Hood, Tesla, Nvidia, etc., all of them bounced pretty nicely. Here's another chart. This is an update from 3 weeks ago. 3 weeks ago, asset managers had 3% of their assets in cash. Now it's 1.4% in cash. Now, this data is not universal because it depends on different surveys, but it doesn't seem like institutional investors meaningfully are raising their cash pile. It seems like they're deploying their cash more and more. So the fact that now asset managers only have 1.4% of their assets in cash, it kind of seems like they've been buying the dip. And as long as the dip doesn't keep dipping, which I think it can, maybe another couple percentage points. I don't think we're going down 10, 15% from here. Then that should be okay. But if we continue to increase the dip, there might just not be enough cash on the side to be able to buy that dip. And then finally, this chart right here, this happened yesterday. In the first 5 months of the new fiscal year, we have hit a budget deficit of 1.15 trillion. So yeah, also credit card debt was at an all-time high at 1.2 trillion yesterday. We got to lower these rates, dude. We got to lower these rates. Especially we got to lower these rates if we have credit card debt at 1.2 trillion, because the average APR on credit card is at least 20%. I think it's closer to 25%. So the revolving balances are getting expensive to pay, and we need rates to come down to be able to try to resolve this. We are breaking records at every level. Breaking records at every level. So those were some of the core pieces of macro data. If you're just joining, PPI came in better than expected. We will see how this market opens up. The big movers are Intel up 13% on their new CEI, Centennial down 8%, UiPath down 16%, Adobe down 7%. All three of them had kind of crappy earnings. SoFi's up 1% on a $5 billion loan platform deal with Blue Owl Capital. Robinhood's down 1.3%. Palantir that announced 4 different partnerships today. The 2 of the biggest ones being with Archer and Databricks. We'll learn a lot more about that today. I will be at Aipcon. That's why I'm traveling. And I'll be giving you guys some exclusive interviews, so it'll be super fun, and we'll learn more about the companies working with them. But overall, we are red in the pre-markets. We got about 50 seconds until the market opens. If we go green, it'll be hopefully a little bit of a continuation from yesterday, but kind of not expecting it given the Trump EU tweets about tariffs this morning, probably creating a little bit more volatility. Bitcoin as well, 82,800. Bitcoin's actually holding above 80, which is nice because on Sunday it was at 77. So I'm just happy it's above 80 right now. And hopefully we can kind of hold up to that $80,000 level. Yes, Databricks did have a partnership with Palantir. They did have a partnership. We read a little bit from the press release. I'll read more about it, and we'll talk about it throughout the week. But it seems like, I think Palantir's been working with Databricks for a while. They just kind of made it official. But the ontology and then Databricks' AI platform are very symbiotic with each other. So it makes sense that they're formalizing their partnership. And hopefully that just leads to more top-line revenue growth for both of those companies. All right, here we go. Thursday, March 13th, 9:30 a.m. Thank you for everybody for being here. The stock market is now open. All right. Wake your ass up. And if you have to wake your ass up with a Keurig as well, like myself, second day in the row, I'm going to be buying a Keurig. Then hopefully you have some coffee in your hand as well. Robinhood down 1.12%, 38.46. Archer is up 1.5%. The S&P 500 is down about 1/3%. The Nasdaq's down 1/3%. Tesla is down 1%. We also have some Tesla updates we'll talk about in a second. The S&P 500 again down about 1/3%. Netflix down 1%. Apple continuing to decline. This was the one that makes the most sense to me. It was down about 4% yesterday, down about 1% today. Nvidia is going green. Everything's red except Nvidia, SoFi, and Intel. SoFi's above 12. Intel's above 23, 13% up on the day, almost 14%. Nvidia holding on to 117 or 116.5, which is not bad. All the airlines are getting a bounce after going down yesterday. Nubank's up a little bit. Walmart's down a little bit. Dollar General is up 5%. PayPal's down 1%. Occidental is down 1%. MicroStrategy is up 1%. Pepsi is up, or Pepsi's basically flat. Celsius also flat. Rocket Lab, which announced another partnership yesterday after the bell, they are down about 0.5%. Broadcom, are all the semis going green? Broadcom is green, almost up to $200. Where are the semis? The semis are pretty much green except ASML on. SMCI is down 0.5%. AMD is down 1%. NVIDIA again up 1%. Dell's down 1%. Lam Research down 1%. ARM, Marvell are green. Taiwan Semi is down 2%. And then Qualcomm is basically flat on the day. So we're getting some green on the semis. Let's look at the Mag 7. I think all of those are green. Never mind. All of those are red. Microsoft's green. NVIDIA's green. Tesla's red. I don't know if the Tesla 9% bounce is as easily going to sustain. I don't think we have to go back to 215. I don't know if we're going to hold 250. Again, Q1 revenues are going to be the most important thing for Tesla in the next month. I think they have their earnings mid-April. So we're going to see how that turns out. Apple right here is down another 1%. Meta 618, Google 167, Amazon 198, and then Tesla 245. The one thing about Tesla though is it's still down 50%. And whether or not you believe it deserved to be down, to be up at 487 back in December, down 50%, you're going to get some people that are at least excited to nibble at the dip. And so it makes sense we reversed off 215. Now it's just a question of holding this 240 level. Meta at 619, Google at 168. Google announced some really awesome stuff around robotics yesterday that we didn't get to cover. I'll try to talk more about it in a little bit. But dude, the market is completely discounting Waymo and everything Google is doing in robotics. They announced a literal operating system between Gemini, DeepMind, and their robotics ambitions yesterday. They have a stake in a private startup called Apptronic, which is a robotics company as well. So, I mean, they are working. The market's just kind of discounting a lot of those key innovations. And for good reason. I mean, Google hasn't really succeeded with a lot of innovations over the past couple of years, but it looks like they are definitely putting a ton of shots on the goal to see what can happen over the next 5 years in AI and robotics. Marathon right here is up 1%. Bitcoin down about 1%. Coinbase, wow, 186. Coinbase was at 220 the other day. That's down 2.7. Robinhood is down 2%, holding at 38, but it is down. MicroStrategy is up just a little bit. All the Bitcoin miners are down. And then Ethereum right here below 2,000 at 1886. Currently right now. Aipcon will be live, correct. Aipcon will be live. It'll be live, I think, at 10 a.m. Eastern. So just watch out for Palantir's live stream. I don't think Arnie is streaming it. He might be streaming it. But if not, then their official YouTube channel will be streaming it as well. Let's look at some of the SaaS names. They are, oh wow, look at SaaS. All of it's red. Where's Palantir? Palantir is down 1%. Datadog down 1%. Snowflake down 2%. Oracle 2%. They had a good earnings. Atlassian down 3%. MongoDB down 1%. All these, CrowdStrike as well, are getting hit. Intuit, Twilio, and GitLab, probably off of Adobe. Wow, Adobe 10% down. Holy crap, dude. Adobe is down 10%. That is a little tough. A little tough to see. Yeah, Adobe's just been in a horrible situation, bro, for the past 2 years. The last time they were really in a good situation was when they were at 275, September 2023, and they announced that the Figma partnership, but then the EU shut it down and they weren't able to buy them for 20 billion. Which means Figma one day might go public instead. But yeah, ever since that acquisition failed, Adobe has not really been able to make any major inroads. HIMS is down 5%. I don't know why HIMS is down, but HIMS is down 5%. So that one's getting hit. The quantum names, let's see how they're doing. Quantum today, you've got D-Wave up 9%. Did they have earnings today? Maybe there's another headline. NVIDIA GTC is also happening in a couple days, and we'll have the quantum companies speak there. QUBT is up 6%. Rigetti is up 3%. IONQ is up 1%. So all the quantum names are getting some momentum right here. S&P 500 is about to go green. It's about 50 cents away from potentially going green. The spec names are also pretty much all green, except AMC and Oklo. Oklo got cut in half from 50 to 25. Big Bear AI is up a little bit today. Faraday Future is down. MicroStrategy is up. All the quantum names are green. Color is up 17%. SoundHound is up 2% today as well. Oh, they had earnings yesterday? Okay. So it looks like their earnings were not bad. I didn't follow their earnings yesterday, but Street seems to like it. Again, I think at GTC, we're going to get a chance for these quantum companies to talk in terms of the mainstream and like get real coverage on them. I think they're going to be on stage with Jensen talking about the innovations around quantum. Tesla down 2% right here. Amazon came out with their own chip last week. Microsoft came out with their own chip 2 weeks ago. Willow and Google obviously came out with the chip, I think 2 months ago. So we have seen some quantum innovation, even though Jensen said it's like 20 years away. Maybe it's not 20 years away, but we will kind of find out in the coming months if there's any real revenue to be seen and any real progress to be seen as well. Everything is now going red. Meta's red. S&P still red. SoFi down from 1220. That's red. American Airlines is red. Baba's red. Tesla's red. Hood is red. Yeah, Hood 3760. That's down 4% right here. It was down 2%. Lockheed Martin is green. Visa, Oracle, Amazon, they are all red as well. Celsius up, of course. Why not? Why not? Celsius is up. You know, one thought I had yesterday for all the people that own European defense contractors, particularly Rheinmetall, which has been doing, I think they were up 7% yesterday. They had really good earnings. I thought of this yesterday, and I think it makes sense. One of the reasons why all the European defense contractors are green and have been the best performing stocks globally over the past 3 months is because of Trump. It's actually because of Trump. Why? Because if Trump did not have this much isolationist rhetoric, and if JD Vance didn't go to Europe and basically say, hey, screw you guys, we're not going to keep spending all of our GDP on NATO, you guys have to step it up, these European defense contractors would not be getting the momentum from places like the German government, which are massively increasing their budget when it comes to European defense. So although I know a lot of people bought European defense contractors as a way to like get out of America, get less exposure, not deal with as much tariff volatility, part of the reason those assets have performed as well, and unfortunately I did not have any money in those names in January, but I think Rheinmetall is up like 90% year to date or something like that, a little bit more, is because of Trump being so isolationist that Germany and a lot of these other EU countries realized, all right, we got to start spending on our own defense companies. And so it's such an ironic kind of paradox, but if you've been in that space and been exposed to it, you've done very well. And part of the reason you've done well is because Trump is tanking the US markets. And a lot of these EU countries are just deciding to defend themselves at this point. But I do not have any exposure to these names. But for those that do, I mean, it was absolutely the right place to be in 2024 or 2025. I mean, I can't think of a better place to be in other than European defense contractors. Like that is those were the best performing stocks in the past 3 months. I mean, U.S. growth was good, but now U.S. growth has been kind of, Palantir, Robin, all those got hit, NVIDIA, et cetera, over the past month. So, or really it's been European defense. NVIDIA is somehow still green. I don't know how NVIDIA is holding on to its green with everything else going red. It's kind of like the market doesn't want to officially go red because NVIDIA is not following the market. Tesla now down 3%. Again, that 250 close yesterday, not being able to live up to a second day in a row, now down 3% on the day. Netflix as well, down 1%. I did see the trailer for You Season 5. I'm excited for it. Very, very excited for it. I think it's going to be a good show. So hopefully that season is well. But Netflix right here down about 1%. Intel, wow, 17%. Holy crap. If you're in Intel, congrats. Is Steve? I don't know if Steve still. I think Steve sold his Intel for NVIDIA. I think he did. I think he said that live a couple weeks ago. I don't know. I'll ask him today. But Intel right here, 17%. The new CEO, I guess, is this kind of like a Starbucks situation where the street's excited for the new CEO. The name of the guy is Lip Bhutan, who used to lead Cadence Design Systems. And he previously doubled their revenue and boosted their stock by 3,200%. So the market's showing a decent amount of confidence in this guy being able to do the same, hopefully, for Intel. HIMS is down 7%. I don't see a headline on HIMS, at least not immediately. It could just be volatility, given HIMS is a growth stock, and it's been actually holding up relatively. I know it's down from $70, but it was holding up over the past couple of weeks above or close to that $40 level. Morgan Stanley put out a report today. No, I don't see the catalyst for HIMS being down 7%. I don't see it. Bank of America reiterated how bearish they are yesterday, but that was yesterday, not today. Dude, Bank of America does not like HIMS at all. They've got like a $20 price target. They're like vehemently. Like I've read the report. They do not like it. They almost think like HIMS is a scam, bro. It's kind of weird the way Bank of America thinks of it. But they are not buying this growth story at all. And they've been wrong for the past year now. But they continue to be bearish on the name. Tesla 241, S&P 558, Netflix 912, Google 167. That's red. What's going green? Grab. a little bit green today. I bought some more Grab yesterday. That's up 1.54%, 428. I bought at 422 yesterday. Rocket Lab at 1844. Berkshire at 501. Nubank's green, $11 is Verizon green today. Verizon is green. That's up 2%. So again, kind of that shift from growth to value happening again today. SMCI goes green. Okay, so that's following NVIDIA. That's good. Still confused why NVIDIA's green, but maybe money's leaving other... No, well, as soon as I say that, NVIDIA goes red. Of course, why not? So there you go. NVIDIA goes red. That was expected. It was expected to happen. Chris says, send me a StreamYard. Okay, Chris, I am sending you a StreamYard. Let's get Chris's thoughts on the market. I'm going to have to leave a little early today, guys, probably at 10:20, because I've got to get ready to go do Aipcon. So, yeah, we'll talk to Chris, and then we will end the show for today, probably by around 10:20. Celsius is green. SMCI is green. Intel is green. Intel really holding on to the pump. NVIDIA going back to green right now. Intel right here, 17%, dude. Volume is 68 million shares. Goodness, dude. Intel gets on average, like, I think 20 million shares. So that's a lot in the first 12 minutes of the market being open. Robinhood right here down 3%. NVIDIA 116.11 currently right now. There will not be a market close show today. I'll be live on Aipcon, so you guys can tune into the halftime show. But there will not be a market close today because I'll be gone the whole day. But I will get a lot of interviews, backstage content. So in a couple days, you guys will see some juicy stuff from Aipcon, and hopefully you enjoyed that as well. Path is also getting hit. Path, those crappy earnings continue to get the street upset, down 17% here on the day. SMCI basically going flat. NVIDIA back to being red. Chris, good morning. How are you?
Well, a little bit better than usual, but man, let me tell you, all this economic uncertainty, I think it's starting to backfire a little bit. Usually when you see all these tariffs and all this other stuff, then the market's going down. You would see that 10-year going down as well, right?
Yeah.
You're not seeing that today.
Yep.
Okay. That is not good. That means that
so can you explain in layman's terms, why is it not good for the CPI, PPI data to be as good as it is, but the 10-year to not go down?
That means that the bond market might be expecting, at least in the short to medium term, higher inflation. Okay. And the thing is, like, while the Trump administration is playing this dangerous game of, put on tariffs, take tariffs off, put on tariffs, take 10 tariffs off, and that may bring uncertainty and less capital investment. The challenge is on the longer end, people are like, oh, maybe we're actually going to get stagflation. Like this whole thing right now where you just went over and started accusing the EU of basically being created to fuck over the US. I mean, that's just plain out wrong. And now it's kind of like people are a lot less serious. And the other thing that you have to remember is a lot of these countries, they're also US debt buyers.
Yeah.
So if you keep messing around, people are not going to have confidence in the US. And eventually those debt buyers will not buy US treasuries. And if they don't buy US treasuries, then you're basically going to have to figure out other customers to buy them.
Chris,
right?
what was your reaction to, I think, and I might get the number wrong, but I think Canada sold 300 billion of US bonds. Did you see that?
I did not see that. I have to look through it, but I didn't even know they had 300 billion in bonds like that. So
yeah, but it goes to your point, which is that if they're starting to sell bonds, then that's bad. Yeah, so March 11th, the size is undisclosed. I don't know where I got 300 billion from, but they did say, hey, screw you guys, we're selling your debt. Right?
Yeah, well, that's the thing. Like when it comes to debt, you have to basically show that you're a country that's going to be stable, that's going to grow, that you're a safe place to make put your money towards. So as the markets come down and you're starting to see inflation rise again, people are like, hey, wait a second, like, do I really want to hold on to the country who's kind of like every day causing themselves to be isolated? Like, do you really want to be a part of that? And so I don't know. We have to just look at the market structure, and I think this is a really bad position to be in, where you kind of, if you're one of the big, look, the U.S. is a debtor nation. Okay, we've got $36 trillion in debt.
By the way, real quick before you continue, the number is Canada owns 300 billion of bonds. So you know,
Yeah.
hopefully they don't sell all of it, but they do have a decent chunk of US.
The challenge is Trump is fighting everyone. So now everyone could coordinate something like this and really like hit the US hard, right? So imagine right now the EU, China, Russia, all these guys that hold treasury bonds, they start dumping them in the same way, because he keeps going. I mean, he's got to pick and choose his battles, Like I get that you want to have big beautiful tariffs and all that stuff, but you can't do that to the entire planet all at the same time. I mean, that's how you cause yourself to be a pariah nation, right? Where people won't even take you seriously anymore. So I don't know if this is the art of the deal, but this is not good. The one thing I have been reading is some of the stuff coming out of the White House, just Howard Lutnick being a little too much of a like a yes man and basically like not reining Trump in a little bit from his baser instincts, and it's causing a lot of challenges. So as an example, Politico did a great report and showed that like even people among the Trump administration, they're getting kind of tired of Lutnick and Lutnick's ideas of, hey, let's just tariff them, let's just tariff that, and the president's a great guy, and it's like, dude, the last thing you want on your team is a freaking yes man, so I think that's where we are. I think when you look back, you had Wilbur Ross and Steve Mnuchin, who were much better at maintaining economic confidence. So even though we had tariffs, remember, we still tariffed China. We did it in a way where it was more structured. And because of that, we were able to do it in a way that no one really I don't know, thought the US was actually like a bad guy, So right now, I think the Trump administration is picking too many fights with too many people all at the same time.
Kris, did you believe the bounce that we had yesterday? Because it was a good bounce. Did you believe it at all, or you kind of expected the red day to come after it?
I think until the Trump administration gives any indication that this whole tariff regime is over, I think we're going to have a lot of volatility with people basically saying, oh, well, maybe this is the bottom. And then it's like, no. Then the next day, Trump says, I'm going to put 200% tariffs. Like I haven't been able to write on Patreon for about a month. Like, and the reason why I haven't been really able to write anything is because anything I say gets wiped away 12 hours later. Anything I try to even project out, it doesn't make, like, literally the sands are shifting under our feet by the minute. So it's really hard to invest in this current market. There are a couple of companies that you can sort of like make some good money on, but overall, I think the market is just, I don't know, it's a very tough market to be in.
It's weird because if you were in value over the past couple of days, you've done well, the Verizons of the world versus Nvidia's. But then yesterday we get a reversal. Verizon's down 5%, Nvidia's up 7%. But then today it's like so I think it's very wishy-washy. And to your point, it's hard to come up with a strategy, which means you might just stay in cash instead.
I think that's what a lot of people are doing. A lot of people there is a lot of money on the sidelines that's just basically like, look, I don't want to get into anything right now until there's more concrete information on what kind of policies are actually going to be applied, and they're going to stick to those policies. See, the thing is, people, like, if you say I'm going to put a 25% tariff on X, that's fine. That you could do that. The problem is when you go 12 hours later and says, no, I'm going to take that back, and now you have no credibility, and then you do 25 next week because they didn't live up to their demands or whatever. Like this is not how you conduct business. And if this is some kind of grand strategy, I'm not so sure how successful it is, but the market is clearly saying we would rather not be involved in all of this, so that's where we are. There are going to be one or two winners that I think people really should focus on. Like you said, with the defense contractors, Rheinmetall was a really good one, because especially if you look at their Oricon system that has like air burst rounds for anti-drone stuff, it's like second to none. You really got to check that out. I spoke to
Dude, the fact that you're becoming a European defense stock expert now just shows where we are.
I brought up Rheinmetall before. Like me and Amit Patel actually spoke about it like a few months ago, when Ukraine, like when the what is it called, the Germans were sending over equipment, Rheinmetall actually has some of the stuff that you really, really need in this war to succeed. So yeah. Yeah, but look at Venture Global, VG.
Yeah, I saw a lot of insider buying happening there.
Yeah. Well, the insider buying is one of the things that that's, a good thing, but at the same time, they are, if there is a deal to be made that's low-hanging fruit for the Trump administration, this would be it. The US, because of its trade imbalance, quote unquote, trade deficit with the Europeans, one of the tactics that they're probably going to use is like, look, you are too dependent on Russia for natural gas. Become dependent on us for natural gas. And Europeans might be forced into buying more natural gas from us instead, in which case now companies like Venture Global would end up benefiting, especially because they have so many cargoes on the spot market. So longer term, there's capacity that's going to be coming on the US. But the challenge is, if you don't have long-term buyers, then it's hard to get financing. So the Europeans might end up developing something called the Japanese model, where the Japanese end up taking equity stakes in US LNG exporters, so that this way, whenever they buy stuff, it's almost like you're getting a discount, right? So think of it this way. Like, imagine right now you love going to Chipotle. So you're like, oh, you know what? Maybe I'll just buy some Chipotle stock because I love going to Chipotle so much. So now what happens is every time you eat at Chipotle, you're giving money to the company, but at the same time, you're getting the company is going higher and you're benefiting from that price increase. So it's kind of in a similar thing, but it's not 100% like guaranteed in stone. There have been conversations about possibly renegotiating some of the deals that are out there, but companies like Venture Global are going to benefit massively from natural gas.
We did see. Speaking of Russia and natural gas, we did see Russia rejected the brokered peace deal this morning. Bloomberg reported. In your opinion, when do you think they officially accept some type of deal to full on have a ceasefire, or not even a ceasefire, but an end to this?
Once again, this is the mistake. This is, in my opinion, it's a mistake by the Trump administration by basically being so what's the word? Like, so in favor of the Russians that basically you've emboldened the Russians. Like, the one thing you don't want to do is negotiate with someone after you've said, like, I support you guys. Like, so now he's weakened Zelensky and Putin has said, you know what, I can kick this guy. So basically Putin is trying to get everything that he possibly can. And yeah, I don't know if this is going to end up working to the Trump administration's favor. The one thing you got to hand to the Biden administration is that they had like max pressure on the Russians, and the Russians were losing men, material every day. And the Europeans, we could have just kept supplying them with natural gas and so it's cut off all natural gas from the Russians, and then like literally like take their economy to ground zero. And that could have been effective. Now it's not, doesn't seem to be the case. So now the Russians are a bit emboldened. They're recovering a little bit. They had some recent gains in the Kursk region. So I think Putin has basically said, you know what, we're going to take more, or we're going to negotiate for more. So I don't know. This is where people in the Trump administration, I'm hoping that they're not just a bunch of yes men and they actually give him good counsel. What do you think about that?
I mean, dude, I have no idea how this is going to play out. Like, I don't even know. I have what he did with Zelensky in the office, I think, was so shocking to the entire world. I said, ironically, that's what got a lot of the European defense contractors to start getting ready to fund their own war. And that's what's helped those stocks. But then again, how is Putin going to react to that? And if Putin does feel emboldened, then when does this thing end? At what point of negotiations is it going to take? How much are we going to have to give up in order to get him to officially come to the table? I don't know.
Do you know what I think it was the biggest mistake so far among by the Trump administration? Cutting off arms sales to the Ukrainians, like that, or not even sales, but cutting off arms aid to the Ukrainians. that showed the world that the US is actually probably not a great partner to be with. And any security guarantees are basically paper guarantees and they don't really matter.
But the pushback, though, from the Trump administration is that we've spent way too much money dealing with this. And at some point, we have to stop, right?
And the Ukrainians have been spending lives, dude. There's a big difference. Like the last thing you want to do is be like, yeah, let's compare the freaking almost nearly million people that the Ukrainians have lost versus $300 billion by the Americans. You know, like I get America gave money and stuff, but the Ukrainians are literally playing with blood, bro. There's a big difference. Imagine right now we had gone to Europe and said, you know what, England, why don't you guys, why don't you guys negotiate with Hitler? You know, that's where it's coming off. So yeah, I'm a man of peace. I want peace. I don't think the Ukrainians should be, like, I want this war to be over, but not on the terms that the Russians are willing to do it at. And I don't know, the market's eventually going to piecemeal that. The challenge, though, is that by doing this, the U.S. is basically caused this internal feeling that the U.S. is not a reliable partner. And because the U.S. is not a reliable partner, why should people buy the F-35? Why should people buy U.S. defense systems that can basically not be supported by the U.S. in time of war if you don't follow their policy? So
let me ask you this question. So if Trump continued to support Ukraine and didn't isolate from Zelensky the way he did a couple of weeks ago in the Oval Office, and we didn't have this whole new tariff policy regime, what would be the difference between the Trump administration and the Biden administration?
Keep your shit behind closed doors. That's the difference. You can negotiate for peace, just do it behind closed doors and terms that are not going to politically mess you up. The Biden administration for I don't even know if Sleepy Joe was awake, but at least they had a clear, concise message that we have Ukraine's back. Right now, you can't be this guy that's like, oh, you know what? You're going to sign this deal. Oh, if you don't sign it, we're going to cut you off. Oh, the Europeans are the bad guys. Come on, guys. This is getting out of hand at this point. The U.S. is starting to become a pariah state, dude. That's just the facts that I see. And I don't know.
So Google's down 2%, Apple's down 2%, Nvidia just went red. I mean, this seems like the most predictable red day after yesterday's green. Do you think tech can't go green until there is an end to either the Russia situation or the tariff volatility?
I think
is there any way we can rally in the midst of those two macro things happening?
I think there just needs to be straightforward policy on what you're going to do. Because the thing is, if you go after this trade policy and tariff policy, these countries are going to hit back at you, and they're going to hit back at your strongest parts, that are basically going to cause this reaction. So they're not gonna you think Europe is oh yeah, let's go not buy some Fords or some shit like that. No, they don't care. What they are gonna do is oh, you know what, maybe we'll just start hitting the tech companies like Meta and Google and Microsoft and everything else that are more painful to the American economy if they end up taking huge hits. So I think right now we're at a point where the US is basically, in my opinion, all right, and this is my opinion, if people don't like it, they don't like it, I'm sorry, has overplayed their hand. They've created too many enemies. You've created enemies with literally the Canadians, the most friendliest people you could possibly be with, and you're attacking them on a daily basis. And then the Mexicans who are are you serious right now?
Okay, so do you think Canada was going to do those 25% tariffs on exports to electricity to New York? They took those away yesterday. Do you think there's, at the end of all of this, maybe in 3 months, hopefully not in 3 years, there will be some negotiations that lead to better free trade agreements? Or do you think it's all hoopla for Trump's ego around tariffs right now?
That's the thing. I don't know. I really thought that there was some kind of grand strategy that could theoretically be applied, but at this point, I don't know. And the thing is, the people around him are not giving him good counsel, in my opinion. And I think eventually you're going to start to see heads roll, because you're in a position right now where you do control the House and the Senate, but it's with such thin margins that if there's a chance that the Congress is going to be the one that takes the brunt of the storm during midterms, Republicans are basically going to turn around and say, you know what, screw you. We don't give a shit. We're not going to follow what you want, and basically use pressure on Trump to basically change some of the things around it. The
Chris,
other
Chris, we got to stop you there. Stay with
Yeah.
me for 10 minutes. We got Bessent live on CNBC. We'll react to that, and then we'll be done for the show today. But let's get Bessent on CNBC.
For joining us.
Good morning, Sarah.
Let's start right there, because Carl just went through the markets. It's another sort of turbulent day here. The volatility has really picked up. We're down another more than 3.5% for the week, almost 10% from the recent highs. I know that you guys have brushed this off, but I do wonder if you're starting to get concerned now that these losses are picking up.
Well, look, Sarah, what we're focused on is we're focused on the real economy. Can we create an environment where there are long-term gains in the market and long-term gains for the American people? I think, having been in the markets for 35 years, I know the market is prone to big unwinds like this. I think we've seen, a lot of position unwinding, and I can't really speak to that.
I guess, and this has been consistent with your view, but 62% of Americans own stocks. I mean, it's near 20-year high. So how can the White House not be concerned about hardworking Americans' 401k plans?
Look, Sarah, I didn't say we're not concerned. I'm not concerned about a little bit of volatility over 3 weeks, because if you look over the long term, the reason stocks are a safe and great investment is because you're looking over the long term. If you start looking at micro horizons, stocks become very risky. So we are focused over the medium long term, and I can't tell you that the market is going to go up today, tomorrow, next week, but I can tell you that if we put proper policies in place, it's going to lay the groundwork for both real income gains and job gains and continued asset gains.
Understood that you're focused on the long term, and part of it is these tariffs, but now there's concerns about a possible government shutdown. Senate Minority Leader Chuck Schumer saying the Democrats are going to reject a government funding bill. We have this deadline tomorrow night. What is your expectation, Mr. Secretary, and how destructive would this be?
Well, it'd be incredibly disruptive. And look, Sarah, I know you said you've been in Singapore all week, but I think the underreported story of since January 20th and of the past few weeks is this incredible Republican unity and this Democratic disarray. Is that we've seen Speaker Johnson get through with President Trump's help a tax bill, get it over the Senate. We saw a clean CR bill. And if Senator Schumer wants to reject it, hurt the American people, close down the government, and they're going to own any of the problems that go with it, including economic slowdown. And if this is all they got, then they ought to regather and think about what they're doing to the American people and the economy.
You do think that a shutdown would cause economic harm?
It can't be good.
Yeah, I mean, look, the market's been really focused on tariffs, Mr. Secretary, and it's been another sort of up and down ride this week. A lot of uncertainty among business leaders. This morning, President Trump threatened a 200% tariff on Europe on wines, champagnes, and alcoholic products coming out of France and other EU countries. And I do wonder how that comes to be. Was this premeditated? Did you know about this? As this is in retaliation to what Europe did, in retaliation to the steel and aluminum tariffs, but 200%?
Look, I was with the Business Roundtable yesterday. I think it was 135 CEOs, and I talked to them about our plan, which includes tariffs, deregulation, and what I call reprivatizing the government, and bringing down this incredible level of government spending. And one or two items with one trading block, I'm not sure why that's a big deal for the markets.
I think that the big deal for the market is just the not knowing what's next and what the target is necessarily going to be, and also not knowing where this stops. Because if we ratchet up tariffs, they retaliate, we go higher, then what?
Well, look, sir, it could go the other way too. Look, that's the nature of these reciprocal tariffs. That all President Trump is asking is for countries to take theirs off. So we have identified some strategic industries, the steel, aluminum, likely autos, but everything else is up for grabs, and that's going to be a decision that's made by our trading partners.
Yeah, that was one of my questions, which is how these tariffs come off, if that is ultimately the goal, because it feels like once they go on, it just gets out of control from there.
Well, again, that's a decision by our trading partners if they want to ratchet things up. And I could tell you, as somebody who's studied the history of this, it is the surplus country that takes the greatest hit. We have a big trade deficit with these countries. So in the event that there's a back and forth with tariffs, I would counsel these government leaders that they are on the losing side of this argument economically.
What you mentioned the business roundtable that you attended yesterday. What did you hear from CEOs on this issue? How much frustration or nervousness is there?
Look, I think that we were always going to have a transition from this incredible, unsustainable level of government spending that we had. I think last week I called it a detox. And generally, they're very supportive of that. And we're going to have a transition. We are going to de-lever the government and re-lever the private sector, both through the regulated banking system and through industrial deregulation. They were very excited about that. And the one thing in terms of certainty that everyone was the main topic is the tax bill. And we're working on that every day. I had a meeting with the Senate House leadership and the Kevin Hassett from the White House yesterday. So that's moving forward nicely. And I'm confident that that's on track. We're not going to have the biggest tax hike in history on Jan 1. We're shooting to get this done this summer, and I think that's going to provide a lot of certainty for American households and for industry.
I definitely want to get to that in your meeting and where that's going on Capitol Hill with the tax cuts. But just while we're on trade and the response from corporate America, when you say that when we're in a period of detox, you used that word on CNBC last week, is that a euphemism for recession?
Not at all. It doesn't have to be, because it'll depend on how quickly the baton gets handed off. Our goal is to have a smooth transition. But I tell you, Sarah, the easy thing for us to have done would have been to come in and just keep this massive spending level going. And it's unsustainable, but could we have kept it going for a year, 2 years, maybe even 4? Maybe, but you're risking a financial calamity. So, we are trying to get this tax bill done. We are controlling expenses. And when we get the tax bill done, so if you can change the trajectory, up revenues, up economic growth, hold expenses flat, or do the unthinkable and cut expenses, then that's a pretty good trajectory on growth. And if we go back to the model in the 90s, that's exactly what happened. We'd see interest rates come down, we'd see the private sector take up the slack from the government. Because right now we have excess employment in the government, and that those people can be moved to the private sector.
Yeah, I mean, the question is what's realistic when it comes to cutting the debt. I mean, I think you yourself have said you want to get to a 3% deficit to GDP. We're almost 6.5% last fiscal year. Doge is working on it. $115 billion in Doge savings so far, though. So that's not going to make a dent. Where do you see the meaningful cuts coming from when you talk about rebalancing away from the government? Well, look,
I don't know what your family budget is like, but to me, $115 billion is a lot of money. That's 5% of the deficit last year. So I think that's a pretty good start. And it's only been 6 or 8 weeks. So there's probably a lot more that we can do. And there's 2 parts to this. It's accelerating the economy, growing the revenue base, and controlling expenses. The U.S., we do not have a revenue problem. We have a spending problem. The government revenues are right at the long-term baseline that the previous administration just blew things out to the upside, and we're trying to get this under control.
What about the economic signals that you're seeing right now? We saw this surge in small business optimism after the election because of some of the policies you're talking about. And then for the second month in a row now, we've seen a drop. Also, the Atlanta Fed, for instance, is forecasting a negative growth rate for the first quarter. I could go on about some of the confidence warnings right now, but I am curious if you're concerned about what you're seeing in the underlying economy.
Well, sir, I think you've been away, but I think the Atlanta Fed has revised up their number to a positive number. That was due to gold imports, which was kind of an anomaly. So, I'm not worried about a very noisy indicator. And again, as I told the Business Roundtable yesterday, as I tell your viewers, what we're trying to do is create economic certainty. We're going to do it with the tax plan. We're going to do it with deregulation. And I also said to the Business Round, I think it was 135 CEOs yesterday, if you came out with a plan similar to what Doge wants to do with the federal government, all your stocks would go up 15 or 20%. It would be considered a miraculous restructuring, cost savings, and put you on a sustainable course. So I think we're not getting credit for this yet. I think we will. So.
Yeah, I mean, and part of what you want to do is lower interest rates, which you've said, and that should happen if the government cuts spending. I do wonder. We've seen a drop in rates, as you've said, from near 5% on the 10-year, we're down to 4.3%. But it's happening for the wrong reasons, right? It's happening because of economic slowdown concerns, and it's moving in the opposite direction as stocks. So, do you want to see rates fall, even if that's why it's happening?
Well, look, let's disaggregate, Sarah, why rates are going down. We had a surprise CPI yesterday on the downside. We had a flat PPI. So maybe the inflation is getting under control, and the market's going to have some confidence in that. There are a lot of reasons that rates can come down.
I wonder also what you make of the U.S. dollar. I mean, this is right in your territory as hedge fund manager, I know, and also Treasury Secretary. U.S. dollar's been weakening as well, which wasn't necessarily what was supposed to happen with the tariffs, and whether that speaks to anything about foreign demand for our assets in the U.S. right now.
Well, Sarah, I don't have to tell you or anyone on the show, markets live in the future, and the U.S. dollar priced in a lot after President Trump's victory and the Republican sweep. So, a lot was priced in that it's natural to see an adjustment. And I think the markets adopted a wait and see attitude. And, the other good news for global consumption is that for the first time in 25 years, the Germans are going to take off their debt brake. This is something that the French leadership had tried to do. The Italian leadership, the whole EU have been very frustrated with German spending. And President Trump has gotten them to up their spending on military. So we could see an upside growth surprise in Europe. China seems to have stabilized with some of their working groups, so that other countries are doing better. It's natural that after this big surge in the dollar, that other currencies could do well.
Yeah, and we have seen the euro shoot up like that. Since you mentioned China, I am curious if there's a dialogue going on between you and your Chinese counterpart, on whether there's any talks scheduled for President Trump and Xi, just given the U.S. has amped up the tariffs to 20% on Chinese goods, whether there's any capacity or scope for discussion about what to do about that or a potential deal.
Well, there's always capacity for discussion, and a lot of what President Trump does is maneuver into a good position for a deal. So I've had one conversation with my Chinese counterpart. We had a very, very good discussion. I talked about some of our national security concerns, about them buying sanctioned Russian oil, sanctioned Iranian oil, the fentanyl crisis. And Sarah, the other thing that we've seen, that with President Trump's initiatives, with the tariffs on Mexico, on Canada, on China, we've seen the fentanyl imports at the border down 40%. 40%. And think how many American lives, think how many families that saves. So yes, we're having a dialogue, and I'm sure at some point President Xi will engage in high-level talks. I can't tell you when.
Right. So you did mention that you met with congressional leaders on Capitol Hill about extending the tax cuts. Where are we? What are the biggest challenges so far in getting this done?
I think it's just coordination. Speaker Johnson did a fantastic job of getting it out of the House. It's with the Senate now, and I'm hoping that they could get to a joint markup sometime in the coming weeks.
Isn't it hard enough to roll over the 2017 tax cuts? How do you pay for some of the other stuff that they want to put in here and that the president wants to put in here? Increased SALT cap, tax on no tax on tips or Social Security, that sort of thing.
Well, Sarah, I think to a lot of people it's not obvious that if we extend or make permanent the TCJA, other than getting back full expensing, there's no stimulus there. So we are just keeping the economy on the same level that it is. So it's important to add the president's initiatives here to give the economy some impetus. And again, that's going to be through a combination of growth and some spending restraint. And look, I've been in the investment business for 35 years. I thought I understood CBO scoring from the outside. Shame on me. Now that I'm on the inside, I see how crazy some of this scoring is. And for instance, CBO, it's all in a 10-year window, assumes a 1.7, 1.8% growth rate no matter what. If we have the biggest tax hike in history, CBO will tell us we're going to grow at 1.7, 1.8. And if we are able to get the tax bill through, get some new stimulus in, then we're still going to grow at 1.7, 1.8. Neither one of those scenarios really holds water in the real world. So we're trying to put the real world projections together, share those with the House and Senate leaders, and they're very receptive to those.
I also wanted to ask you, while we have time on Ukraine and on Russia, because I know you've been involved in these discussions. You've been to Kiev, met with President Zelensky. The President Trump threatened this week, if Russia doesn't sign on to this ceasefire, there will be financial repercussions that would be very damaging, devastating, he said, for Russia. And I know you've said also last week in New York that you're prepared to go all in. So what exactly does that look like? And have you drawn up plans for further sanctions or tariffs on Russia to pressure them to do this deal?
Well, I'm not going to show, I'm not going to lay our cards out on worldwide TV, but I could tell you that I was very dispirited during the Biden administration's sanctions level, because they, I thought, went at a minimal sanctions level because they were worried about domestic energy prices. We've seen crude come down about 15% since Inauguration Day, and that is with the Biden administration, Jake Sullivan, deciding that they're no longer worried about crude prices. So, if we just take kind of a scale 0 to 10, that I think the Biden administration sanctions on Russia were probably a 3. On the way out the door, they took them to a 6. And I can tell you, we wouldn't hesitate to take them up to 10. And again, this is all part of President Trump setting the table for successful negotiations. He's willing to apply maximum pressure on both sides.
No, I know you were very strong on this during the confirmation hearings on your views on this. Finally, we talked about Doge. I mean, I'm just curious, how would you describe Elon Musk's engagement with Treasury at this point? We know that there was some early, stories about the access, but how closely are you working with him at this point, and how much room is there to cut in the Treasury itself?
Well, look, there's always room for better performance, especially when we think about the federal government. And Sarah, what I like to emphasize, I emphasized it yesterday to the business leaders. I want to emphasize it to your viewers. Like, let's remember the E in Doge is efficiency. It's not elimination. It's not extinction. We are trying to make the government do better for the American people, and right size it. And I don't think that there is anyone who is happy with the bundle of services that they get from the federal government. So you're sitting in Singapore. I met with some leaders from Singapore yesterday, and Singaporeans love their government. They think that it does good things for them, and they spend about 18% of GDP on their government. If we were to balance the budget, we'd be at 18% of GDP. So why can't we have the government do a better job for the American people at a better price?
Well, we certainly appreciate the time, Mr. Secretary, on all the issues that you're focused on in your portfolio. Sorry for the delay from Singapore. Next time, hopefully in person. We appreciate it.
All right, that is Scott Bessent. Kris, I got to get out of here in 5 minutes, so I want your quick reaction. Before you talk real quick, shout out to Kindly for the very kind super chat. Thank you for the $50, sharing a little bit of gain from Intel. Thank you for the daily updates. Kind, thank you for being here. Congrats on Intel. It's holding 17% even in this crappy market right now. So congrats on Intel, and thank you so much for the super chat as well. Kris, your reaction to what Bessent said for the past 20 minutes.
I kind of feel bad for him because, this whole tariff thing is probably not his idea. I think he's pretty much more of a free markets kind of guy. And even if he did apply, the tariffs, he would do it in a structured way. The guy is a markets guy. I think the other people are definitely leading things astray. And the sad part is, like, you can't talk bad about home team, right? When you're on the team. So anything that he says, you have to use with a grain. You have to basically take with a grain of salt. So I say there are parts that he was being very truthful and very honest, and then there's parts that he was basically covering for. And one of the things that he was covering for is the tariff policy, which I think is more of a Trump thing than his thing, but he's got to toe the party line. So he's doing it,
What do you think of his response? And it's not just his response, but the sort of administration's, I guess, go-to talking point. When asked by the media about stock market volatility, they keep saying, think about the long term. So when she asked half of Americans own stocks in their 401k, what do you think about that? His response was, well, in the long term, stocks outperform. Is that an acceptable answer right now?
I mean, it's the truthful answer, right? Eventually, everyone learns to accept reality and basically do okay. The question that I have is that his way of saying, like, listen, we are basically at a point where we need to make some hard decisions early, and that later on those hard decisions will pay off? I mean, makes sense. The only thing is, though, you don't want to put so much emphasis on what you're doing that you're going to cause long-term structural damages to the U.S.'s reputation around the world. Like, I understand that there are some strategies at work in the background to get things to change course, especially this thing with, hey, we want to have less workers in the government and more people in the private sector. Well, you got to give private sector more confidence, that tomorrow is not going to be, hey, I'm going to tariff your industry, So, and not to mention one thing to point out, jobs are not nearly as elastic. So imagine right now you're like, you've been working 10, 15 years in the government role doing policy, and now you're like, oh yeah, you know what? We have more manufacturing jobs. You really think people like that are just going to say, yeah, let me go work on the factory line all of a sudden? It's not as, I don't know. It's just, I feel
this is what Jeremy Siegel was saying. It's just like these types of jobs are not the jobs worth fighting for, essentially, right?
Yeah. It does. I mean, long term, for national security reasons, you kind of do want some manufacturing to return to the U.S., but you don't need it to be at the same levels. I think right now we're at a very difficult point in markets trying to read things, and it's not. I'm not talking as an investor. I'm saying, imagine you're a business owner or a company and you're trying to run an operation. Every day things are changing, and those changes are being done literally on a 12-hour basis. That's not how you can manage things. And so the challenge that you run into is that you're going to end up waiting and seeing. Now, is that what the administration wants, which is people curtailing on spending to the point where inflation gets down to a meaningful level, and then they can kind of say, you know what, let's ease off the tariff talk, let's ease off of everything, the tax cuts will kick in, and boom, all of a sudden you've got a booming economy again. If that's the strategy, then this is the time to actually look for those companies that are out there that you find that they're going to do well long term. But you better have a long term horizon. If your horizon right now is 6 to 9 months, you better think twice, because you don't know what's going to happen.
Yeah, it's not as easy as 2024, where we can expect every month to gain 1 or 2%.
Well, the challenge was 2024, there was just so much liquidity in the market, right? So basically the Biden administration was spending a lot of money. So eventually that money made its way into corporate treasuries and balance sheet. So the market, of course, is going to go up. The question now is that these policies are definitely going to hit growth, but they're also going to end up hitting companies' earnings. And so right now, a lot of people, and this is the trap that I feel like some people are getting into, they're like, well, forward earnings are going to be X, and because of that, this company is cheap. And I have to remind people, like, forward earnings are just a projection of what they're likely to be based on today's stuff. But that could change 6 months from now, and now your forward earnings looks like complete trash once they revise them down. So be careful of that.
Well, also, forward earnings don't matter. If we get into a recession, forward earnings is a pointless metric, right? So we've got to avoid a lot of macro pain.
But that's what I'm saying, that it's just an estimate of what earnings are going to look like a year from now, which no one really knows what they're going to look like. So, so there's a lot of companies that could look cheap that end up actually being rather expensive, So I don't know. Like right now, we need to apply some patience, I guess. I'm not particularly selling anything. I'm pretty much just stacking cash from any income that I'm getting. I am buying preferred equities, basically because they're giving me yield, and they're not nearly as exposed to the general equity markets. So that's one thing. And other than that, I'm just taking up like small plays like Venture Global, which are, in my opinion, long term they're going to do well, but in the short term they're actually going to be net beneficiaries of some of the Trump policies, which is surrounding like more American products going overseas to balance trade deficits. So the Europeans need natural gas in order to basically grow their GDP and develop, and they can't buy Russian gas, so they have to replace it. And if the Americans are willing to provide something and the Trump administration is willing to kind of back it, then hey, you know what? That's an industry I want to be in. So that's why I'm long on Venture Global.
All right. Thank you, Kris, for your thoughts and opinions. 50% of the chat agrees with you, 50% disagree. That's how you know that we are in very polarized times. And it looks like this volatility and this polarization is not going away anytime soon. This is just the market that we're in.
So. Yep. We're just going to have to deal with it, man. So it is what it is.
All right. Thanks, Kris. Appreciate it. Kris's Twitter right here in the chat. I will talk to you later.
Take care.
Take care. All right, folks, that is it for today. Markets are trying to bounce a little bit. S&P went from red to green to red, and now it's back to being red. It was literally green, I think, 2 minutes ago. Same thing with NVIDIA. NVIDIA was pushing 117.7. Now it's at 116.9. So, I mean, we are definitely in a volatile market that really has no idea what direction it wants to go. Tesla's down 3% for the day. It was just pushing 242 back to 240. It was at 234 at one point to the day. Now it's up at least from 234 back to 240. But we will see later throughout the day if we actually end up going green. On the poll I put out, 60% of you think no, we don't go green today. So we'll see in the next coming hours. All right, cool. So I'm out of here. We've got Aipcon. Again, it's going to be very exciting. If you go to Palantir's channel, they're going to be streaming it. They just tweeted a picture of it, so I can show you guys this picture I took yesterday. This shit looks crazy, bro. This thing, this set is going to be what? This is the best set. I've been to, this is my third one now. I've watched all 6 of them starting in June of 2023. This set is like the coolest set. Those 4 chairs you see right there, that's where the halftime show is going to be. So it's going to be me, 2 employees, and then 1 of the speakers that's going to be sitting with us during the halftime show talking. And it's a really nice set. It's just, it is absolutely beautiful. They've got different colors and stuff. I think you guys are going to enjoy it. It's going to be really cool. So I'll be live for the halftime show. I'll be tweeting all day, different behind the scenes footage, selfies, pictures, all that good stuff. So you can follow me on Twitter. That's in the description. And yeah, we'll try to get as much content out there around Aipcon. Very, very blessed to have the opportunity. Again, this is one of those things I'm incredibly grateful for. Palantir has embraced retail in a pretty meaningful way, and that's really because of Chad. Chad and Iliano, they made it a priority at the beginning of 2024 to get the company to start embracing this retail investor base. You know, it's so funny. I was randomly watching the Q3 2022 earnings call from Palantir last night. I don't know why. Honestly, it's probably because it showed up in my feed because I was watching Karp's full discussion at 92 and second. That was the thing with Andrew Ross Sorkin. So that popped up as well. And I started watching the end of it. And the last question that they always ask Karp on the earnings call is, what do you have to say to the individual investors who are listening? And this was 2022. The stock was at $6. And so Karp was just deflated, bro. He was just like, because like, you know, he's just been through 20 years of building this shit. The stock's down 80%. And he was just like, we really appreciate you guys. We're trying. Just believe in the long-term mission. We're going to make it happen. And then you look at 2024, the latest earnings, Karp's like trying to hug us virtually through the stream because of how much has changed. And it's just been a hell of a journey. It's been very, very exciting. And I'm incredibly grateful to Sasha, Chad, Iliano, Karp for embracing retail and allowing us to do this type of stuff and being out here. Because it's special, you know, it's really special just to have the opportunity to be here and kind of be a voice for retail and take you guys behind the scenes. And the fact that they want to incorporate this organic community into their events, right? They don't need to do that, but I think they want to do that because they feel such a connection to us. And they really make me feel like family when I'm here. All the employees, I don't feel like an outsider. I don't feel like, you know, honestly, I feel like I'm another employee at the company. It's like, even though I'm not, but like they really make me feel at home. And so super, super cool. Super awesome. It will be streamed live at 10 a.m. It will be starting at 9:40 Pacific time. So what time is 12:40 Eastern? It's going to be doing their halftime show. So that link, let me just give that to you guys real quick. That's on their Twitter. You can watch it on X or you can watch it on the YouTube stream. But yeah, 9:40 a.m. Pacific time, 12:40 Eastern. You have the pre-show. So this link right here, I'll put it right here in the chat. You can use that to watch on X. Super cool. Super, super, super cool. Very excited to be here again. And hopefully it'll be very fun to get you guys some behind the scenes footage. And I'm going to be talking to a lot of customers. I'm talking to Archer. I'm talking to Anderl. I'm talking to a lot of the big names. Databricks partnership was announced today. We had a ton of new partnerships. We had 4 partnerships announced this morning. So they are going hardcore with showing off that their commercial growth is not slowing anytime soon. And I will try to get a ton of content for everybody to take a look at all these different customers that are getting excited for their partnership with Palantir. I am not getting paid for this. In fact, they did not even pay for my flight or my hotel. Like it's funny. People think I get paid. Dude, I have not gotten a single dollar from Palantir outside of the gains that I've made from Palantir. And you know, quite frankly, it's because they don't want there to be a conflict of interest, or because I cover the company so intensely. You know, even the idea of paying for your flight can always, you know, people can always think, all right, so there's some conflict. So they have not paid me a single dollar, but I have not wanted a single dollar because what Palantir has done for my life and for me financially, and also for me just having a topic to cover that has created this community. I mean, it's been the coolest thing in the world. You know, the only reason all of us are together today is because of Palantir 2 years ago being this, or at this point 4 years ago, being this esoteric, enigmatic company that for some reason I got really excited about. And then this whole community formed. And then we got Matt, Arnie, Amir, Steve, all these people that have become part of the community. I mean, that's priceless. You know, there's not a dollar amount you could put on those relationships that Palantir has been able to be able to give us. So very, very excited. It's going to be a fun day. I will take you guys along with me. And yeah, I will be sharing a ton of behind the scenes on Twitter. And then I'll have a bunch of interviews next week when I start posting them as well. Word of the day as we end out today is hyaline. Hyaline.
Hyaline or hyaline.
Hyaline or hyaline. I am going to be vlogging. I'll be vlogging. There'll be a vlog as well. So probably like Sunday, there'll be a vlog. So you guys will see behind the scenes vlog as well. Glassy or transparent. The icicles hanging from the roof formed a hyaline curtain that glistened in the sun. Some newborn fish are so hyaline that their delicate bones can be seen beneath their skin. All right. Well, I don't even have a sentence for this one. Hyaline, classy or transparent? I have no idea what to do with this word. No one has ever heard of this word before, but I think that's why it's a good word, right? It's always a good word if you've never heard it before, because then it's actually like a unique word. But no one has ever used it before. Oh, here's a better one. All right, so this is on vocabulary.com. Taurine.
Taurine.
Use the adjective taurine to describe someone or something that resembles a bull, like a big, broad dog lumbering through the dog park. Okay, so we're in desperate need of some taurines in the stock market because the bulls are gone. But hopefully we get some taurines soon. Look, I don't want to say we're bottoming, but there's a lot of indicators we've talked about over the past couple of days that does feel like this is the pain. I'm sure we could have even more pain, but Mag 7 stocks are trading at their lowest premium against the other magnificent, not magnificent 493, but S&P 493 in the past 7 years. So not saying that they're the cheapest ever, but they have been cheaper than at least in the past couple of years. And so it's just going to be a question of when people step in and start buying, or if this tariff volatility can take them even lower. But if it takes them even lower, as long as earnings don't go down, NVIDIA goes to 90, it just becomes cheaper. Google at 140 becomes, like, if it actually goes lower and earnings growth doesn't decrease, I think money's going to step in eventually. The question is going to be how late, or how long does the market take for them to go lower, and how much money eventually steps in. All right, cool. I got to get out of here. I'm going to be late. Thank you, everybody, for being here. These are going to be the note cards that I have at Aipcon. Dude, they pay attention to so much detail. It's going to be so cool. You guys are going to love it. You're going to love the set. Carp's going to be speaking. There's going to be a lot of the presentations are going to be awesome. There's going to be 9 presentations today. So it'll be fun. Good stuff. I'll take you guys behind the scenes, and then we will keep going from there. All right, cool. Thank you, everybody. Appreciate you all. We'll see you guys live on Aipcon. Bye, everybody. Have a good one.